UnitedHealth Group has been under fire recently, and the company just keeps getting hit with bad news after bad news. The stock is now down over 40% year to date. Now, since this is a stock I've expressed interest in before, I wanted to do a deep dive on all the bad news that have come out this year. Ultimately, I never invested in the stock because of the regulatory risks associated with it and just the overall messiness of this industry. However, when I saw that the stock had dropped like 40%, I kind of got interested again. My initial thought, without fully knowing what happened, was that the regulatory risk has essentially been taken out of the stock at this point. So that's why I'm doing this deep dive on everything that happened to try to figure out if this is something I want to buy or stay away from. I'll provide the facts first, and then I'll get into my personal opinion and whether I'm buying this stock or staying away. And at the very end, I'll provide my price target for the next 5 years. So let's jump in. Okay, looking at the news timeline here. This really all started with the death of the CEO, Brian Thompson, in December 2024. From there, we got the news that the Department of Justice, or the DOJ, was launching an investigation into the Medicare billing practices of UnitedHealth Group, and that was in February 2025. Then the company reports earnings in April, and they miss and lower guidance. Also, in April, we saw an executive order signed by Trump that could be seen as unfavorable for UnitedHealth. Then in May, or this month, we saw the CEO resign along with stock downgrades, and we got another wave of DOJ investigation headlines, and on top of all that, another Trump executive order signed. And just a couple of days ago, we have allegations of further improper payments to nursing homes. So that was just a quick overview. Let's dive into each one of these. I'm going to skip the death of the CEO because essentially what needs to be said has already been said. He was murdered on the streets of New York City. It was horrible, and the stock price suffered. So moving on to the investigation on Medicare billing practices. I'm not going to review materials or articles from both times that this news came out. I'm just going to share what this article from May 15th says. I think it highlights the allegations and the stance of UnitedHealth Group pretty well. The article is titled UnitedHealth Under Criminal Probe for Possible Medicare Fraud, Wall Street Journal reports. The only difference between the two separate instances, the one in February and then the one in May, is that the earlier report said that the DOJ is launching a civil investigation, while the more recent one, the May one, mentions a criminal investigation. The difference there is that a civil investigation is what we see with big companies all the time. We see Google, Apple, Visa, MasterCard, these big dominant companies are always under civil investigation, but a criminal investigation can be seen as more serious and can lead to, criminal charges, prosecutions, hefty fines, and even prison time for individuals for intentionally breaking the law. So with that said, let's see what this article says. The U.S. Department of Justice is carrying out a criminal investigation into UnitedHealth Group for possible Medicare fraud, the Wall Street Journal reported on Wednesday. UnitedHealth said it had not been notified by the DOJ about the supposed criminal investigation reported, and the company stood by, quote, the integrity of our Medicare Advantage program. The stock fell 8% in after-hours trade following the report. I'll explain exactly what the Medicare Advantage plan is a little later when we cover the earnings report, because that's the reason the company gives for missing earnings and lowering their guidance. But let's continue here. The health insurer has been under pressure for months. On Tuesday, UnitedHealth Group CEO Andrew Whitty stepped down unexpectedly, and the company simultaneously suspended its 2025 financial forecast due to rising medical costs. The announcement sent shares plunging nearly 18% to a 4-year low. Stephen Hemsley, who led the company for more than a decade until 2017, is taking back the reins following setbacks, including the December murder of Brian Thompson, the CEO of its insurance unit, which catapulted UnitedHealth into the public consciousness. So there's a new CEO. I'm interested in hearing what he has to say about the cases and what he says about the future of the company in the next few quarters or their earnings reports. Overall, I think this could be seen as positive and potentially seen as a fresh start for UnitedHealth Group. Moving on, the DOJ's healthcare fraud unit is overseeing the criminal investigation, which focuses on the company's Medicare Advantage business practices, the journal reported, citing people familiar with the matter. In February, the journal reported a civil fraud investigation into UnitedHealth's Medicare practices. The company had then said that it was unaware of any new probe. In the same month, U.S. Senator Chuck Grassley launched an inquiry into UnitedHealth's Medicare billing practices, requesting detailed records of their compliance program and other related documents. UnitedHealth shares are down about 40% for the year. The DOJ earlier this month filed a lawsuit accusing three of the largest U.S. health insurers of paying hundreds of millions of dollars in kickbacks to brokers in exchange for steering patients into the insurer's Medicare Advantage plans. Nearly half of the 65 million people covered by Medicare, the U.S. program for people aged 65 or older or with disabilities, are enrolled in Medicare Advantage plans run by private insurers. The insurers are paid a set rate for each patient, but can be paid more if patients have multiple health conditions. So the whole accusation here is essentially that UnitedHealth Group has allegedly been using various methods to overdiagnose patients with diseases and conditions to collect more money from Medicare Advantage. The idea is that by making patients look sicker on paper, the company can bill the government more money per enrollee, which could amount to, Medicare fraud if this has been done intentionally. Of course, it's possible that this wasn't done intentionally. United Health could argue that their goal has simply been to make sure patients get the care they need as early as possible, and what looks like overdiagnosis might actually just be proactive treatment. At the end of the day, we won't really know what happened until the investigation is complete and a judgment is made. And as investors who don't have inside information, all we can do is weigh the risks of this and determine how cheap the company has to be for it to make sense as an investment to us. The worst case scenario here would be the loss or suspension of their Medicare Advantage program, which makes up roughly 27% of UnitedHealth's revenue. But the suspension of a contract like that is very rare for a company that cooperates. Even in past Medicare fraud cases with Anthem and Cigna, those companies paid large settlements but kept operating. But let's move on to the earnings report now. United Health reported Q1 2025 revenues of 109.6 billion, a 9.8 year-over-year increase, but 1.8% below analyst estimates. Adjusted earnings per share or EPS were $7.20, also below estimates by 1.2%. So yes, misses, but nothing dramatic. After reporting those numbers, the company revised its full-year adjusted EPS guidance downward to a range of $26 to $26.50 from the previous $29.50 to $30, citing higher than expected medical costs, particularly in Medicare Advantage. And there it is, blame Medicare Advantage. So this is where we need to understand what Medicare Advantage is and how it works when it comes to these health insurers. So Medicare Advantage is a program where private insurance companies like UnitedHealth Group, Humana, Cigna, and so on manage Medicare benefits on behalf of the government. Instead of the government paying for hospital and doctor bills directly, it pays a fixed amount per enrolled person to the insurance company. And that company is then responsible for all the care and the billing and so on. So this is where the nuance comes in. In this process, we have bidding on contracts. So each year, insurance submit bids to the Centers for Medicare and Medicaid Services, or CMS. The bid estimates how much it will cost to care for a typical enrollee in a particular area. And then we have capitation payments. If CMS accepts the bid, they pay UnitedHealth a fixed monthly fee per enrollee, which is called this capitation payment, adjusted based on how sick that enrollee is. And because of that, UnitedHealth Group's profit depends on its accuracy. If UnitedHealth Group spends less than what CMS pays them, they make a profit. If they spend more, the loss comes out of their pocket, not the customers. So it becomes this game of accurately estimating cost of care. And in the past couple of years, all of these insurance companies have been outbidding each other to win more business and gain market share. Now, we and those companies have realized in the past few quarters that they have clearly been underestimating those costs. So, what happened in 2024 and 2025? Well, UnitedHealth Group misjudged the cost of care for their Medicare Advantage members, particularly in Q4 2024 and Q1 2025. And those enrollees used more medical expenses than the company expected. And this is likely a catch-up effect from delayed care during COVID. Remember, the average age of a Medicare beneficiary is 72 years old. Old people weren't going to hospitals during the pandemic. and therefore UnitedHealth Group missed earnings and revenue estimates, and essentially from there had to cut guidance for 2025. So going back to the numbers a bit, as I mentioned, they lowered guidance from a range of 29.50 to 30 in EPS to 26 to 26.50, or roughly 12%. And then after that, they completely cut their guidance. So, you know, could they be expecting a loss of maybe 25%? Who knows? But in my opinion, this alone doesn't cause a 40% plus drop in the stock price. And there are other issues that play into this. So let's move on to the executive orders that Trump signed. So there were two executive orders that could be seen as, negative for UnitedHealth Group. So let's look at them both. On April 15, 2025, the first executive order titled Lowering Drug Prices by Once Again Putting Americans First, that's the name of it, aimed to address the cost of prescription drugs by directing the Department of Health and Human Services, or HHS, to collaborate with Congress to modify the Medicare drug price negotiation program. This order focuses on aligning the treatment of small molecule prescription drugs with that of biological products and implementing reforms to prevent any increase in overall costs to Medicare and its beneficiaries. And then on May 12th, 2025, the second executive order titled Delivering Most Favored Nation Prescription Drug Pricing to American Patients. And this introduced the Most Favored Nation, or MFN, pricing strategy. This policy ties U.S. drug prices to the lowest prices paid in other developed countries, aiming to reduce the high cost of branded prescription medication in the U.S. But it's important to keep in mind that these executive orders only set the policy direction, but the actual implementation requires action from HHS and potentially legislative changes by Congress. Basically, these orders initiate a process rather than enacting immediate changes. So, for UnitedHealth Group, these policy changes could impact their pharmacy benefit management services by potentially reducing drug costs, which may decrease expenses but also affect revenue from previously negotiated rebates and margins. And this falls under the services segment for the company. And as you can see, it's a pretty small part of the business. But on top of this, potentially implementing new pricing structures and compliance measures may require operational changes. So that could lead to higher G&A, or general and administrative expenses, for the company. All that said, though, it's important to understand that these changes, as of right now, only apply to Medicare, not to, the commercial or employer-sponsored insurance plans. And the Medicare Advantage side of the business in 2022 accounted for roughly 27% of total revenue. So it's not like this is a hit to the entire business. And just to clarify, yes, Medicare Advantage is 27% of total revenue, but then the pharmacy benefit management services is just a small piece of that. If we look at the valuation here a little bit, a trailing PE of roughly 12 and a forward PE of 13 for a company like UnitedHealth Group that puts up, this sort of revenue growth, 10+% a year, EPS growth, if we average the past 5 years, even faster, and spits out more and more free cash flow every single year, then obviously that valuation is pretty low at this point. And yes, the allegations could mean that these rates were a bit exaggerated, but even if we tone them down a little bit, let's say revenue growth 8%, earnings growth 12%, free cash flow growth, 7, 8%, the valuation at this point might make the risk worth it, depending on how big you think those risks are. But you as an investor have to figure that out for yourself and see if, the valuation at this point is something that makes this company, including all of the risks and the uncertainties moving forward, evaluating that and seeing if that's a risk reward profile, attractive to you. These executive orders were honestly what I was most worried about when I saw the news, and I wanted to make sure I understood it really well, but to be honest, this specific issue seems short-term in nature. Of course, lower drug prices means that UnitedHealth Group pays less for those drugs, but also sells them for less. So Overall revenue might be a little lower for part of their business, but they should be able to keep their gross and net margins roughly the same. And if we know anything about Americans, they'll continue to love prescription drugs, and lower prices could potentially just lead to more volume. But obviously, we'll just have to see how all of this plays out. Again, we just want to factor the risk of this into our investment, not predict what's going to happen. Next up, UnitedHealth CEO steps down for, quote, personal reasons. We got this news on May 14th. I think the timing here is too good for this to actually be personal reasons, and it's definitely worrying that the CEO steps down unannounced after being with this company for 4 years at this point. And just to clarify, if anyone is confused, Brian Thompson, the CEO that was murdered, was CEO of United Healthcare, and this guy, Andrew Whitty, was CEO of the parent company, UnitedHealth Group. And if we read this article a little further, we'll again see who he's being replaced by. He will be replaced by Stephen Hemsley, the health insurer's board chairman and former CEO from 2006 to 2017. Whitty, who ran the healthcare giants for 4 years, will remain in a limited role as a senior advisor to Hemsley. So Hemsley is a veteran at UnitedHealth Group, and I think this could be seen as a fresh start for the company to a lot of investors. And investors are getting a person who knows the company inside and out, and that person is buying a shit ton of shares. He just bought $25 million worth of UNH stock. Now, insiders sell for a ton of reasons, and I think sometimes it can be hard to interpret anything from the sales, but when they buy, I think it's a huge sign of confidence. And Hemsley isn't the only person buying shares here. A ton of other executives are buying millions of dollars worth of stock. And finally, the last thing I want to cover, the latest news, these allegations of improper payments to nursing homes. The improper payments issue involving nursing homes really centers around allegations that UnitedHealth Group, through its Medicare Advantage plans, made payments to nursing homes for services that may not have been medically necessary or properly documented. And this practice potentially allowed for inflated billing and reimbursements from Medicare. Federal investigators are examining whether the company used risk adjustment practices to classify patients as sicker than they were, similar to the broader Medicare Advantage scrutiny, and then funneled them into affiliated or partner nursing facilities. If proven, this could suggest a pattern of exploiting Medicare rules to boost revenue, which could be, really bad to defend against. Okay, those were all the facts. Now, to my opinion and what I'm doing. Am I buying or staying away? As I mentioned before, I didn't invest in this stock because of the regulatory and industry risks and really couldn't justify it at the valuation it was trading at back then. But now it's down to, a 12 trailing and a 13 forward PE. And even though I was pretty excited when I heard the news and saw the stock price drop, because I do like companies that are thrown to the side, I came in hoping that I wouldn't like it because I generally prefer other types of businesses that just don't have all this uncertainty. But all that said, I am buying, and I actually already bought. I think the issues brought up are mostly short term in nature. And even the part that I was most worried about, the executive orders around drugs, that doesn't even affect the overall business that much. So I'm buying because ultimately I think the company will make it through this mess. And I'm seeing enough positive signs, like the new CEO, a United Health veteran, buying $25 million worth of stock. Of course, he can be wrong, but that, along with the short term nature of the issues, I think United Health Group has been oversold. And if we just think about how the United States is structured a little bit, everyone is pretty much forced into healthcare. And a company this big in the healthcare space is just integrated throughout the entire, nation pretty much. And if you get sick without healthcare, it's like hitting the financial reset button. You just start over. If we get more specific about my buying, though, I'm not in a rush with this company. I'm not going to make any big one time buys. If we look at my position here, my first buy was $1,800, and I'm just going to gradually add to this one. These DOJ investigations will probably be an overhang for years to come. I don't think these cases are going to get resolved in a year. It's probably going to be multiple years. And the company might have to go through a period of restructuring and uncertainty. And at that point, it may even go lower, especially if we get hit with a recession or even a market crash. United Health Group is probably going to go way lower. I'm not expecting a V-shaped recovery on this one. I think I have time, but I mean, we'll see. But essentially, what I'm trying to say is the path forward is murky enough that I'm not willing to make a big move here, especially since I'm seeing so many other great opportunities in this market and companies that, yeah, are undervalued, but they also don't have this insane uncertainty around them. One thing to mention though, if and when this company gets back up to its previous valuations, I would probably look to sell. Again, I rejected the stock at the valuation because of the regulatory risks, so if it gets back up there or even higher, I might take some profits. Now, if we look at some price projections here, this is my base case that I've come to. This is a pretty bearish base case, in my opinion. An EPS growth rate of 7, let's say they get all the way down there. Their EPS, in the past 5-10 years, they've been averaging anywhere from 14% to 17% growth every single year. I'm saying 7%. Appropriate EPS multiple, appropriate PE ratio. If we just look at the valuation history here, their PE during their worst times, they're anywhere from 17 to 20. Now, I'm assuming the situation here is going to get better. So, realistically, maybe we would see a PE ratio from 20 to 25 during positive times. But I'm saying 18 here, again, being pretty bearish in my base case. But even in this base case, if I can, get almost a 15% return, like I'm okay with that risk that the company has. Based on these assumptions, in 5 years, the company will be back up at $600 a share. Let's say, I said anywhere between 20 and 25 PE ratio at the end of this 5-year period. So let's give them a 22 PE ratio. Then we could be seeing a per share price of $736 or a compound annual growth rate of almost 20%. Let's say the EPS doesn't take nearly as much of a hit as I'm factoring in here. Let's say they keep up like a 9%. That's almost 22 compound annual growth rate. What about 10%? It just keeps going higher essentially. But let me know what you think about UnitedHealth Group in the comments below. Are you buying or are you staying away? And if you're staying away, let me know why. But that'll be it for this video. See you in the next one.